Hey, good morning, Kim. You ready to talk
Morning.
about your favorite topic, inventory?
Inventory, yes, I am. This is going to be fun talking about some important setups, right?
Absolutely. I like to talk about it because a lot of people who just start out don't understand how important some of these things are. And then they call
Mm.
us later on going, help.
Very, very true. It's better if you can set it up right initially, right? So, all right. Well, let's do quick introductions and then we can get talking. So, hello, everybody. I am Kim Dallefeld. I can make the PowerPoint work. Uh, been doing NAV BC for a few years here. Mostly, I'd like to say I'm a proud Texan, and I love working in BC and NAV. And that's kind of all about me. I'm just here to help users, partners, whoever. Let's get the most out of your BC implementation that we can. And my friend here is Mr. Robb Delprado. Robb, tell us
Thank you,
about
Kim.
you.
Thank you. We have similar backgrounds. We've been in this world quite a while, both living and also in the BC world and NAV world. But we have similar likes in that we want to share the knowledge. That's what this conference or this webinar is all about, sharing information that we've seen people struggle with. So without further ado, let's take a look at our agenda.
Yeah, sounds great. So, Robb, I think there's inventory setups overall, and then there's some more item specific things, right? That we can talk about.
Absolutely. And my first one there, and I don't know if you want to just read off all the different ones, but under inventory setups, I'll tell you that we've got the automatic cost posting, we've got the expected cost posting, the automatic cost adjustment, the prevent negative inventory, and location mandatory. You want to go
And then
down
in
the end.
item setups, we've got stockkeeping units, replenishment methods, costing method, which we could talk for hours on, units of measure, and then service item groups. So I think we're going to cover some really great things for users today, Robb.
And I'm going to kick it off by getting on my bandwagon about that automatic cost posting setup. And, lots of folks, especially the partners, are concerned about performance of the system. They don't want to see their clients complaining about, oh, it's sluggish or it's slow. And that's true if you have thousands and thousands of transactions you're posting every day. I will tell you, though, that, and it is even in the information, if you click on that, that you could run this and not find any degradation in performance. In fact, most smaller companies don't even worry about it.
Right.
They have it turned on and it runs just fine. The users never notice anything. But I've worked with large companies too, and I've worked with companies that have had over 40,000 different items and had 7, 8, 9, 10 locations. So we're talking somewhere in the neighborhood of 400,000 SKUs, and they have it turned on. And the difference
Wow.
here, the thing that makes this, and here's what the user needs to understand. Do I want to see my cost posted when I post my transaction? That means, is it going to hit the inventory account when I post my purchase order, or when I post an inventory adjustment, or when I post a sales order? This is what determines whether or not it automatically hits the right GL accounts at that point in time.
Very good points. I want to make two. One is I have a client who does 5,000 orders a day, and they did find it was in NAV. They're still in NAV, by the way. And they did find it was a little sluggish for them. So they run it at night. And that works for them. So they're a day behind. But I want to say that if this is turned off, you have to run adjust cost. Can be set up in a job queue, but you have to run adjust cost because you're not doing automatic cost posting. And it's a concept that's kind of hard to explain. It's like, why isn't that just the way the system is? You always post the cost and inventory. but that's not how this was originally designed. And at least now we have an option to turn it on and go, right? So, yeah, it's a very important setting. And I agree. I want it turned on if at all possible.
Well, as an accountant, and by the way, there's a second piece to that. Not only do you run the adjust cost, but you have to post the cost to GL. And as a finance person, I always want to know. Now, you mentioned your client who was sluggish and they were on NAV, but Microsoft has even come out and tweaked that in BC, this runs faster. And my advice to folks is try it before you turn it off. Don't just assume.
Totally agree with you. You know, there's another piece of this is the expected cost posting. I know a lot of people don't necessarily like this. They think it creates too many entries, but I'm like, why not turn it on? Why do we care about the fact that I'm going to get additional accounting entries when what I get out of it is I've got an accrual for my inventory receipts, right? I can cut off my end of month, like the last day of the month, maybe early morning on the 1st, and know that my liability for what I've received, my inventory's right. I just think it's a great thing to have turned on. Now, I wish that that we had maybe 3 of toggles: expected cost posting for purchasing, for sales, and for production, right? Where we could pick and choose. But when you turn it on, you do turn it on not just for receiving, but also for things that you've shipped but not invoiced. And it only does the cost. It doesn't do the sales side of the accrual, which that's a little bit of an accounting issue, right? And then it complicates my inventory to GL reconcile if I'm doing production orders, because I get output, not finished information, kind of all lumped in. So I still think it's a great tool, and I recommend turning it on. The nice thing about this is you can actually turn it on later if you want to, and it actually makes all those entries. So
excellent.
All right.
Well, tying all that together is the adjust cost, or the automatic adjust cost. And Microsoft gives you a number of different options here. But again, my preference here is that it's always on. That means when I'm posting my cost, and I'm posting a purchase order or a sales order, is it going through and adjusting the costs for the transactions? And so if you're a new person out there using BC for the first time, you may not understand this, but Microsoft has designed, and actually it started with NAV, Navision back with the Danes, where it goes out and does a true up. So if I'm running FIFO for a moment and I have my first layer out there at $10, if I post without this automatic cost posting on, and I have a second layer at $20, it's going to use the average of that cost to say, this is my cost for that particular transaction. It's when you actually have the adjust cost run that it will go out and true up the cost and say, hey, that first layer comes out at $10, not the average cost of $15. And again, if you don't run this, if you've got to run your adjust cost and your post cost to GL, that's an extra step in the process. And by the way, that can take some time. Going back to, if I'm going to do this at the end of the month and I want to know where I'm at, having it on, if I've already established it that it's okay and it's not running sluggishly, I'm going to have it on and have true numbers anytime I take a look in the GL or want to run a flash financial report. So again, there's 3 pieces here that tie into the inventory to GL reconcile report that Kim was referring to earlier. And Kim, I know you love to talk about the inventory to GL reconcile report.
We don't have time for that today. But yes, that's one of my favorite topics. I think probably another important setting is prevent negative inventory. And interestingly enough, this also kind of ties into inventory to GL reconcile. If you tend to let your inventory go negative a lot, it can actually mess with your costing. I did have a client who had one company that bought everything and another company that sold everything. And so when they sold, everything went negative, and then they would buy from the parent company, right? And they had trouble with zero quantity on hand, but dollars left. They still had a dollar value. And according to Microsoft, I've worked with them a lot on that, it's because things would go negative, because inventory is matching an inbound positive to an outbound negative when it tries to do all this adjust costs and post costs, right? It's trying to true up your inventory, like you just said, and it can't do it sometimes because if you go negative all the time. So I'm super happy that they added this prevent negative inventory, and I highly recommend turning it on. Now, I turn it on here in inventory setup, but I can also control it at the item level. You can see here the default is set to no. I would like that to say default is yes, but so you can control it by item. I mean, I guess there could be some item for some reason that you're just not going to get in. You're not going to have the receipt done first. I think it kind of goes back to processes. Get your receiving done on a very timely basis, and then it shouldn't go negative when you ship. But it is important in costing for sure.
I do like that they've added that, and I don't know which version they put that prevent negative on the item card, but I've had some folks tell me that in the production environment, they do need to let their components go negative. So this way you can have most of your items set to positive that it can't go negative, and then just have those few items that are impacted by the consumption allowed to go negative. So I do know that in the manufacturing world, this has been a real benefit.
Gotcha. And of course, if you've got multiple locations, super important that you turn location mandatory on. Just think about this. If you don't turn that on, the system will let you post into your east warehouse and your west warehouse, and also post without a warehouse. So now where's that inventory? Where does that reside? You won't know because this wasn't turned on, and the system helps you control the fact that you can't leave that location field blank. I even recommend a lot of times, okay, you don't have multiple locations. Do you ever see yourself having another location? And people go, well, no, but it could happen. So turn it on, and default everything to main or some code, right? Location 1, and just have everything set up where that's what it uses. But so then if you ever need to add one, it's already turned on. You've already got, now you can move things from one location to another. So I like to turn this on no matter what.
Kim, I've got to wonder if this is a holdover from back in the day when Navision and Microsoft went to component selling. Each piece was granular, and if you used inventory, that was a separate charge. I as accountants, again, I still want to have a primary location. I don't care if you only have one. I would set you up with a location and have this turned on, and that way you know that. And by the way, there are benefits to using the location that we can get into later on in our presentation here. But I think it's a holdover that I would have it turned on. And by the way, by default, when you load up a demo database, it is blank. And again, maybe it's to help those people from coming over from simple systems like QuickBooks, because I don't believe QuickBooks allowed to have inventory back then. But you can just put the item in and you just sell it out of the blank location.
Now, you and I are on the same page. I think a lot of us that have been doing this a while will always recommend to turn location mandatory on. But talking about locations, as you mentioned, you want to talk about some stockkeeping units?
So most of my life has been spent in environments where folks have multiple locations. And the stock keeping unit is a great example of how you can manage those inventories from different locations. Here you see a couple of examples. I've got an item out there that the item is 1936-S, but it's maintained in two locations here, an east location and a main location. And among other things, you get to decide how, and we're going to talk more about the replenishment methods in a moment, but here you can quickly see, without drilling into the item ledger entries, the quantities on a purchase order, the quantities on a sales order, your actual quantities on hand. And by the way, off to the left there, you see a quantity in transit for that location. That doesn't show up until you actually post a transfer that goes into in transit going to that location. But when I create the transfer, it doesn't say, oh, I've got a pending transfer. It just waits till you post a transaction. And then that's when you see that's incoming from another location. You can always, and by the way, the other thing is here in this card, it's great that those are hyperlinks where you can actually drill down into the ledger entries and see the transactions or the purchase lines, transfer lines that those transactions are on. But again, the main purpose for the stock keeping unit here is to allow you to control those items at the individual location level.
Right, and I know you're going to talk about this in a minute, but it's not just for how you stock your locations, but you can also have different costs at different locations. If you receive everything into Texas, but then you ship from Texas, say, to Oklahoma, there's a freight charge to get it to your Oklahoma warehouse, and so you might want to add that in as an item charge and carry a different cost in Oklahoma to really get a true what is it costing me for my sales in different places. We're not going to go into a lot of that, but that's another reason that the stock keeping unit has a lot of power. So, but I know your next section is really taking stock keeping units and extending them.
So I touched on that in the beginning, but our replenishment method. So if I've got multiple locations out there, I may not be fulfilling the requirements for on hand the same way. In our main location, I can purchase this item. I can set this up as a purchase. I know I'm going to set it up and buy it from, and down below you see that I've got the vendor number that I'm buying from. And I can have a different vendor item number for that specific item that I'm buying for this particular location. Stepping forward and assuming that I have another location I might be buying this from. I might buy it from, nope, let's go back.
Oh, I'm sorry.
Nope. I might be buying that from another vendor out there, and they might have a different item number. So again, it gives you the ability that when you're creating your purchase order, who are you buying it from? Not just I'm purchasing it, this is my method for purchasing it, but who I'm buying it from. And again, going back to what Kim said in the previous slide, I can have different costs. I might be buying it on the East Coast and they have a different price than if I'm buying it in Texas or California. So again, this is one of the things, and this is the first method for replenishing your items, because you do need to buy it unless you're in a manufacturing, and we'll get the manufacturing later. I'm going to go through this in a simplistic way first, and as we get more progressive, we'll go through that. So now we can go to that next
Rob,
slide. Go ahead.
You just taught me something.
How's that?
It never dawned on me, or I guess maybe I knew it, but anyway, just a light bulb went on that I could actually have different vendors for the same item depending upon the location when I use stock keeping units. I literally, a light bulb just went on. And I was like, oh my gosh, I just hadn't thought of that.
I wish you could also set up separate pricing on the stock keeping unit, because you could have regional pricing.
Yeah, but I agree. All right, well, I'll let you go on to your second method.
So the second method, and by the way, this is a very common situation where we have a main location and then we transfer to other locations. The other locations don't have a purchasing agent, so we're just filling based on demand that's out there. And one of the big things that I've seen, a common error, people set this up and say, yes, I'm going to transfer, but they fail to put the location that it's coming from. You will see this error message when you run your requisition worksheet that says, hey, I'm going to suggest you transfer 5 or 6 items from one location, but wait a minute, I don't know what location, and you will get an error that says you do not have this set up. So that's a common overlook, that they do know that they want to transfer it, but they don't put the location that it's coming from. The other thing is, you can have different lead times, and I didn't mention this on the previous method, but depending on the vendor that I'm buying it from, or depending on how long it takes for me to do a transfer, I can have my lead time calculation, which is pretty critical on knowing when I need to replenish.
And knowing how long it's going to take to get here too, right?
Absolutely. And then we've got replenishment method number 3. And now here we're getting a little bit more complex. We're going to assemble. We have items on hand, and we are going to use those to assemble. And we have choices now. We can assemble it for stock, or we can assemble it as a sales order. So I don't want to have this assembled until I have a sales order in the process. And again, this gives you the ability to decide whether I'm stocking it or just going to push it out the door as we get the order.
So question, Rob, the assembly BOM, the things that go into the assembly, are they stock-keeping unit based, or are they based at the parent item?
I would base them. So here's the thing: when you're going to run the requisition worksheet that says I need to stock this stuff, I would want it in that location where I'm going to have that. So when I run, whether it's my planning worksheet or the requisition worksheet, I'd want to know based on this location, because again, the locations could be miles or states apart, or even countries apart. So I would set those up in the stock keeping unit for the location where I'm going to actually do the assembly.
That makes sense to me.
Now, the other thing, I want to say one last thing here. When you are using assemblies, the important thing to know is that if it's for stock, you actually post the assembly order, whereas when it's an assembly for the sales order, shipping it automatically consumes those items.
Yeah. I think that's a really cool feature. Okay.
And then we have our more complex method of replenishment. We are going to build this ourselves. We are manufacturing, and there you see that we have a manufacturing policy out there. We could be making for stock or making for sale. We have a flushing method that we need to establish. And then where are those components at the location? They're coming from our main location, because again, we're assembling in the main. And again, setting this up, this is a stock keeping unit for that particular location. And I would set that up just like you said before about the assembly. Where are my components? My components are going to be at the same location as a stock keeping unit as wherever I'm either assembling or, in this case, building. And there you see that you have to have all those, the routing and then your production BOM filled out for yourself.
Gotcha. There's a lot of power with stock keeping units. And I don't know why people shy away from using them. Especially when they're doing different types of replenishment from different locations. It really gives you a lot of control over whether it's a transfer order that gets created or a purchase order. I just, the power here is quite impressive.
Well, and the other thing that we didn't talk about or don't have a slide for is that you can set up how you're doing that ordering. Are you doing it based on firm orders? Are you basing it based on lot for lot? Are you replenishing, with safety stock? Are you replenishing with extra lead time? So again, the stock keeping unit is a very valuable tool if you have purchasing agents that are trying to figure out what to do and when to buy.
Absolutely. Okay, so costing method. Again, this is one we could spend a lot of time talking about, but every item needs a costing method, and typically you set all of your items to the same costing method. However, I have seen in production environments where some things are, the produced items are standard and the purchased items are LIFO or FIFO. It's not common, but it can be done. Important thing here is this needs to get set right when you set up your items. Once you transact against an item, you can't change this without some help, some very technical help. So, and a lot of times it's, oh, we'll change this item number to a 9999 number, reset it up, and move your quantities. Not something we really want to do is add item numbers in that we may never use again, right? So, take the time, do the costing method initially. So, what costing methods are there? We have 5 different ones. Standard is that, right? We're going to be looking at a purchase price variance if we buy it over or below our standard cost. This gets used a lot in production and manufacturing companies. My big thing with standard, it's designed to give you variances. How did my price go over when I bought it? Did I spend extra time making it? Did I use more or less raw materials in my production cycle? If I'm not going to review my variances, then I'm doing all of that recording and it's not benefiting me. And plus, there's a whole process for actually updating your standard cost. Some companies are very diligent about looking at their variances, and this works very well. LIFO and FIFO are, I think, especially last in, first out has really become a key with our crazy fluctuation in market costs these days. This last in, first out, and first in, first out. And Rob, I always forget which one is not considered.
Well, LIFO, you must establish. In fact, I was going to wait, but both standard and LIFO require some extra work on the accounting side. So I'm not big fans of them. If, for example, like you were saying, in standard cost out there, if you raise your standard price at some point and you have quantity on hand, your accountants need to track, well, how much did we actually increase the value of quantity on hand that we didn't pay? So you've got to be able to state that. And on the LIFO side, you've got to be able to set up a reserve that says, what is the actual value if I were on a FIFO basis? So both of those require some extra effort on the accounting side.
Right.
Having been a former accountant, I'm not into extra work.
I hear you. Now, with standards, of course, the reval journal actually provides at least how much did we revalue, right? So I think that helps a little bit.
Yep.
Yeah. And because it's going through a reval journal, I can pull it from value entries. So I got some help on that one. The reserve for LIFO, I don't think there's really anything in the system to help you with that one. I do see a lot of people using LIFO, and they're probably doing something to estimate that. Specific, of course, is going to be for serialized items, right? And average is probably everyone's least favorite as a consultant.
You know, Kim, I'm going to tell you, though. I'm going to tell you, it is my least favorite, but it's interesting that back in the day, I worked for a partner that they loved average cost. And then when we started dealing with the issues that creates, certainly wasn't my favorite. Go ahead.
Yeah, I think every consultant that's been there, done that with some customers will agree with you on that one. And it makes a lot of sense to have an average cost, and it is a weighted average, but it just seems traceability is, and we have much better traceability today, but it's still one of those that people kind of cringe over because it's hard to explain throughout. Now, I think one thing that's interesting is when you're using LIFO and FIFO, entries actually get booked initially as an average until a just cost runs, and it matches up your LIFO and FIFO layers of inventory. So a lot of these things that we were talking about, they're very interrelated. As we talk about, the cost that hit the general ledger or the cost over here, or replenishment and things like that, and costs at different locations, different stock keeping units. So there's a lot of pieces that move when you're talking about some of these setups.
And Kim,
mhm.
before we get off of that average cost, remember that the number of layers that are open and whether or not you're using it on the inventory setup page, you can actually do average cost by location and variant or
Yes.
just in total. So the lower the finer you want to calculate that average, the more you're going to degrade performance because it's got to go through and do the revaluations on all those open item ledger entries. And then
Yes.
the last thing related to that is if you go negative with average cost, that is when you can really screw up your valuation.
Yes, yes, absolutely. I was just sitting here and thinking about how all of these things connect together. Just like when we talk inventory reconciliation, and you've got item ledger, general ledger, value entry. It is great when you set it up right and you take the time to really test it and understand. That's something I stress to users all the time. It's a learning curve to understand it, but once you do, it's just going to fit together like a puzzle, right? I know I'm not necessarily real comfortable with this next topic because I haven't used it a whole lot, but there's a lot of power in this as well.
So the service item group, and if you're a service provider, even if you're not a service provider, it gives you one more value in which to filter items. But especially for those service providers, you can set up different item groups, and those item groups have values that if you're a service provider, you know that you have a service item you're working on. That means that I'm selling computers, but when those computers come back in again, I've got different serial numbers for those things, but they all require either the same technician type, meaning that they've got a skill set that they were requiring, or maybe there's certain procedural steps that we're going to do or troubleshooting that we're going to do, or maybe we sell service contracts and we want to give a certain discount on those. So here you see, and I focused on that desktop here, here are some of the things that can be established for those service item groups. So I see that I've got a service discount when I sell a contract. I've got a 6% discount when I sell that service contract. I've also got a price group code that applies to the items, the parts that I'm going to repair it on. If I'm on a service contract, I can also set up a response time that, hey, once I'm over this response time, I need to send out an email to somebody saying, hey, let's get on it. And most importantly, I think, even if you don't use any of those other pieces, if you're a service provider, when you ship a desktop, that check mark on the far right, create a service item, that already establishes the service item for that customer so that should that come back in again, you already have them registered with that particular serial number. It creates the service item with the serial number of that particular item that you've sold. And you see, just because I'm using service item groups, I don't necessarily have to have all the data filled out. For instance, if I'm doing keyboards, hey, I'm not going to do any service item for it. I'll probably just, when it comes in, if I need it covered under a warranty, I'll probably just chuck it and put another one out there for them. And again, they're not typically serialized along with your miscellaneous accessories. But I really can't explain enough the value of this.
Yeah. I think that's a underutilized piece of Business Central is the whole service management piece.
Yes,
for sure.
And I'm also going to say under that standard service item group codes there, you can set up different. So for instance, if I was a washer and dryer place, maybe I've got a setup that the specific service codes for running the washer or the dryer process, when my technician is out in the field, that service order is already set up with the specific codes that I can expect to do out here. Maybe it's an overhaul, maybe it's just a cleaning, maybe it's a filter cleaning or filter replacement, but those are different codes that you can set up that they can be selected from only for those particular items, because obviously you wouldn't do a filter clean on a controller card.
Yeah, yeah, awesome. So I think units of measure is a very powerful tool that I don't see utilized enough. And I just did a couple of screenshots here. Of course, a base unit of measure. I've always been told, and I've always gone by, this needs to be the smallest unit of measure, because everything kind of bases off of that, how you stock it. Of course, I could sell it differently. I could buy it differently. I could buy things by the case, stock it by the each, but sell it by the dozen, right? Or price it. If you look in the bottom half here, I could price it by the pair, whatever it might be. And all of that's going to go back to that unit of measure setup where you say, you know, how many eaches are in a pair? How many eaches are in that dozen? How many eaches are in the case? And also you can have different volumes, different lengths, height, width for sizing, if you will, and that can also feed into some of the warehouse pieces later on. But this is, I see people struggle with setting up items. They'll set up an item for the pair and an item for the case, and instead of learning to use the units of measure, it can be confusing. It is important that if you're going to use them, that your users understand them, that you do default in the right purchase unit of measure. You don't want to buy, 1,000 cases. You want
well, you
to
do
buy...
if you're a beer distributor.
oh my gosh, yes. But so if you buy 1,000 cases and then each case is, 100 of something, now you've got a lot, when you really meant to just buy 100 cases to put 1,000 eaches into inventory, right? And I think that's a confusing piece there that is a reason I don't see these used as for the power that they provide.
Well, that's a very good point. And I will tell you, going back to the beer distributor for a minute, I'm going to, and especially gives a good example because you made me think of something else. So if I'm a beer distributor, I will buy it by the case, but I may be selling it by the case. I may be selling it by the 6-pack. I may be selling it by the bottle. But my base unit of measure in that situation has to be the bottle because that's the lowest level there are. So when I buy a case, it's 24 bottles. But I just had another thought there, going back to beer again. If I'm a beer brewer, I'm going to be probably having a base measure of ounces because I'm going to be maybe producing kegs and cases and 6-packs. Oh, and by the way, now they have 12-packs. So again, how I use it again is the important piece here.
Right. Absolutely. And in all areas, how I stock it, how I sell it, how I produce it, all areas, for sure. Rob, I think we've covered 10 really important items setups, both in the inventory overall and then item specific. But I got to thinking, there are a lot more things that we could talk about, right? And this is just kind of a short list, if you will. So it really takes, I guess my suggestion for people is take the time to see what all is available and then, work with your partner to determine what can really help you with your organization. You might not use all these things. And I know you're not a fan of variant, and I only am because of the new addition that we can set variant requirements by item. But there's so much we can do with inventory. And I think we just scratched the surface, to be honest.
Yeah, we didn't even get into warehousing.
Oh, I didn't even put that on the list. And it's so true, so true. This has been fun. Of course, I love talking about anything BC, but and I even learned something today, especially inventory to geo reconciliation. Yes, but I just want to tell everybody thank you for reviewing our webinar. And if they have questions, we've got our emails in here that they can reach out and ask us for something. And if they have nothing else to do, they could go look at the YouTube. We'll have a new post coming out next week, so that'll be fun as well.
Kim, pleasure chatting with you as always. Thank you again.
Same here, Rob. Bye-bye.
Bye-bye.